Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. We're dealing with a lot of data this morning as well as the aftermath of the Nvidia earnings. And so I thought we'd start off with probably the one thing that everyone is looking at, which is, why did Nvidia do what it did and what were the expectations going into it? And hopefully this is a process that you can use for other earnings events. So here's how it works. If we have a stock that's going to have earnings, let's start with the most basic thing. We all know the date and when it's going to be released. All right, so that takes us to the next thing. That is, what are the expectations in the, say, 4 to 6 weeks? I would focus really on that 4-week, inside 4-week timeline to the ultimate release. So in those 4 weeks, what is expected? And there's a couple metrics we can look at. One is, what is the Wall Street consensus? There could be guidance. The company could have guidance, right? So there's all these metrics here that we know we can compare to, right? Because it's always a comparison. The one that's most interesting is what's always known as typically known as a whisper number. And I don't use typical whisper numbers. I don't know what you'd call the estimized consensus, but I'm a big fan. Let me just make sure I move the clock over so you can see. This site is called Estimize. I'm a huge fan of this site, and I've been using it for a number of years so I can see what the metrics are around the release. And what was really interesting going into the release is that the estimized consensus, which is probably best described as a force rank, for those of you who remember that from many, many decades ago. So what it does is it basically is, imagine if Kickstarter were for stocks and you're sort of using this crowdsourced data so folks can say, yes, I think revenue is going to be here, earnings per share is going to be there. It's very interesting stuff. It's more of a crowdsourced type data point. So you'll see that the estimized consensus, which I think I would not compare to a whisper number. I think it's far better. It was above the Wall Street consensus. It was above the company guidance. And so the expectations going into the release were already for good numbers. That means that's baked into the cake, which means for the release on the revenue side, I'm looking at revenue here. For the revenue to really be a beat, it's got to be significantly better, not than company guidance, not that 28,000 or that 28,737 from Wall Street, but it's got to be well above 29,325. It came in at 30,40, not that much higher. So was it a huge upside beat? Some folks will say yes, if they're using that lower company guidance or that lower Wall Street guidance, right? And this is when folks say, wait a minute, wasn't revenue better than expected? Why did it sell off? This is why. Because the number that we're measuring it against oftentimes, I don't want to say is wrong, but is not as accurate as it could be. So let's do the same thing with earnings per share. All right. So if we're taking a look at earnings per share, you can see where the Wall Street consensus was, what the actual was, and what estimized consensus was. It was a miss, not compared to Wall Street, but compared to the expectations that were baked into the cake. And it's really amazing how accurate these numbers are. So folks say, well, that was a really good number. Good compared to what? Good compared to previous? Nobody cares about previous. This is not a rolling average, okay? So the history of the releases is really not pertinent. It's what are we expecting going into the event? What is happening in that 4 weeks leading into August 28th, right after the bell? And so when you look at where earnings per share was, that could be considered a miss if you're looking at the estimized number. All right, so now let's take a look at Nvidia, okay? And this could be done for any stock. If I'm going to break down earnings, this is the way that I do it. Now, I don't particularly like to trade earnings. And, I was just tweeting this morning this simple fact. Just because everyone's talking about Nvidia doesn't mean that's where the trade is. We've been trading Coke for 4 weeks. I haven't been trading Nvidia. There's this going absolutely nowhere, and there's this. So I guess sort of the punchline to all of this is, just because there's earnings doesn't mean there's an opportunity. And just because it's a popular stock that everyone's talking about doesn't mean that's where the movement is. All right. So make sure you're always asking yourself, am I just sort of doing what everyone else is doing, or am I kind of sticking my head up above the fray and seeing what's really moving? Coke is far outperforming whatever's happening on Nvidia. Right. So keep that in mind as well. But I know a lot of folks are curious about this kind of stuff. All right. So we're sitting right now at 121.46. We reacted by going all the way down. Here we go. All right. We initially reacted by going all the way down to about 115. And now we buoyed up to 121. And if you ask yourself, Rog, what about the expected movement? Well, I don't use the traditional expected movement either. Rog, say it isn't so. All right. You're a heretic. I am, and happily so. Because if 90% of traders lose, do I want to do anything like what they're doing? All right. Hard truth, but truth all the same. So the expectation would be a first and second. So this is the second standard deviation here. That's the first. I know it's a little, let me see if I can't zoom in and make it a little bit easier to see. There we go. Okay, let's squeeze it in. Your first standard deviation of the move was down at 115, call it 41. There it is, 115.41. The other one was 116.8. So I would minimally expect on earnings to push the first or second standard deviation in either direction, right? I don't know if it's going to be a beat, therefore we move up towards 134 to 135 and a half, or if it's a miss and we move down to 115.40 to 116. But this is already out there long before the release. I already know where that cushion of extreme support and extreme resistance is. This is historical volatility, which is markedly different than other volatility metrics like implied volatility or IVR or ATR, right? Okay, that's the zone. So if someone said, Rog, if I wanted to buy Nvidia, or if I wanted to think about where support would be from a probabilistic standpoint, right around 115.41. That's how precise we can be. And the low was 115.03. Not too bad, right? Was it the low 115.03? Right around 115. That's within 40 cents. That's not bad. Now, where are we now? We're not really anywhere special. We're just kind of within that expected move from yesterday. All right. So ultimately, see this here? Ultimately, on the way back up, we're going to have to run into the upper end of the price movement. But nothing really spectacular happened if this is the measuring stick you're using of the daily price movement range going into earnings. This doesn't always work this way, because it's not about the implied volatility alone or my daily price movement ranges alone. It really goes back to this. What was the expectation? And I don't mean Wall Street or company guidance. What was, and I use Estimize, that's my favorite, but use whatever whisper number you'd like. I've just found nothing that works better than this. And how much better or worse was it? And you can see this is a relatively flat number. It looks good, but it really wasn't. It really wasn't a bang out number, because a reason for the strength into earnings was a lot of these expectations being built in, which was that Estimize consensus. So I thought I'd break it down when folks say, Rob, but this was a good number. Why aren't we higher? Because it really wasn't, right? Because it really wasn't. And you can see that playing out in price. So it's one thing for me to say that. And what I'm trying to do is show you the process, because you could do this with any earnings hot zone. All right. So hopefully that was somewhat interesting. I know a lot of folks are curious about Nvidia, and that is how earnings work. What did we expect for this earnings? Who cares what happened the previous 4, 5, 6, 10? Does not matter. What matters is inside that 4 weeks, what is the expectation? And then when we get the number, how far off that expectation were we? Not Wall Street's expectation, not the company guidance, but whatever whisper number or consensus that you use. And that's it. All right. Okay. So that being said, with Nvidia coming up off its lows, we're going to get a little bit of last night, it did not look very good for the NQ. If you were looking at that NQ in the after hours, it's really not after hours for the NASDAQ futures. But if you're looking at reaction, yeah, the NASDAQ had to sell off with that initial weakness because of the weighting that Nvidia has. So are you saying, Rog, Nvidia isn't important? No, I'm just saying that it is a heavily weighted stock, but we don't have to trade it, right? We don't have to go in and say, hey, just because this event is happening, it's like the Super Bowl. I did not watch the Super Bowl last year. Just because it's on doesn't mean I have to watch, right? So here's here's the movement through late Wednesday into early Thursday, and you can see the recovery on the Nas. So this is a relative to the previous session close. This is a strong open, gang. Right now, the Nasdaq's up 0.88%. This is not a flat open. This is decidedly bullish. We're above the previous session close. Okay, so that's what we're getting in the Nas right now. And what about the S&P? Is this a flat open? Not in the least. The S&P is up just over 0.5%. You can see 0.58 from the previous session close. We are well up off yesterday's lows. We are well up off yesterday's close, moving higher. But interestingly enough, do you see how these candles are still stuck inside that daily price movement range? That's its job. Those daily price movement ranges are there to show you where the historical volatility zones of support and resistance are waiting, just like that hyper intense version of that first and second standard deviation with the Nvidia earnings. All right. So with that out there, whenever we're looking at the indices, right? If I'm looking at the NASDAQ, I'm really looking at 4 sectors: XLK, where Nvidia is quite heavily weighted, XLC, XLY, and SMH. We know XLK and SMH will be particularly in play because of their outsized weighting with Nvidia. And if I'm looking at the S&P, this is where we have a question here for XLF. When we're looking at XLF, Ren, now this is where the S&P and the Dow are more pertinent, because where XLF goes and the influence that it has is much more in the Dow and S&P side, not really in the NASDAQ in the least. So if XLF is doing well, that's going to be reflected in the Dow. If the Dow is moving higher because of healthcare or energy or industrials or transports, that rising tide is going to lift typically all the boats. So XLF would benefit. And so, yeah, XLF has been quite strong. You can see the green candles on the daily since the 14th of August. And so, yes, the higher highs, higher lows, XLF has been absolutely one of the relative outperformers. In fact, when you look at the ranking of month-to-date sectors, XLF, I think, is top 7. It's in the top 7. It's not one of the top, tippy top, right? That's still staples. That's still real estate, utilities, gold, healthcare. But financials are up there. JP Morgan would be another one to keep an eye on in this group. And then I also mentioned healthcare. Let's talk about not Nvidia, not NASDAQ narratives, because in the Sector Secrets Mastery, that's exactly what we've been doing, right? As I mentioned before, yeah, Nvidia is an interesting conversation, but for me, it's kind of who cares, because I've got much better movers like Coke or gold in the trading book. So again, it's an easy trap to say, well, this is the big event and everyone's watching, but does it matter to me as far as follow through? And for Nvidia, not really. We're at the tail end of our gold trade, and we're still about 3 weeks out from expiration from one of the hottest stocks that nobody's talking about, which is Coke. And it's attached to the hottest sector, which again, nobody's talking about, which is staples. So sometimes we have to stand guard at the gate of our mind, because what is sometimes interesting is not necessarily the best choice for our trading. Yeah. But I would put XLF in that group, Ren. So great question. Do we want to keep an eye on XLF? Absolutely. Look at the structure there. Look at the bullishness. Look at the higher highs and higher lows. That's the kind of symbol that's going to give us the kind of follow through that we can grow an account with, right? That's what we're here. We're not here because we want to trade Nvidia, right? I didn't wake up this morning. You didn't wake up this morning saying, I want to trade Nvidia. You woke up this morning as a trader saying, where are the opportunities that I can grab onto to grow my account, right? Which is a markedly different statement. Am I checking out Pepsi? Jazz? Yeah, we have a number of stocks that are on the watch list in staples. I'll show it to you right now. Here we go. So if I'm looking at staples, yeah, it's just not a Coke story, although that's the one that I like best. We've been rolling with that name for a bit now. But frankly, take a peek. It's really difficult to find something we don't like, right? So Coke is near the top of the list. By the way, Coke is heavier weighted than Pepsi in the staples. So that's kind of why it gets a bit of a nod. And it's also a very affordable, very scalable, very liquid option to trade. So Pepsi's there as well. Philip Morris, Mondelez, Altria, and Colgate. So those are the names that I really like. Those are all very, very good. Those are 6 trends in the overall staples sector. And staples themselves, if there's liquidity in XLP, right, that would be something to keep an eye on as well. I would leave Walmart alone. I'm not particularly impressed with this movement in Walmart. Costco's been incredibly volatile. Procter & Gamble is somewhat interesting to me. We might take a look at it. It's the number 1 weighted stock in XLP, but Coke continues to be really, for me, not just moving like XLP, but frankly, moving better than XLP. And we could say the same thing about Philip Morris and Altria and Colgate for that matter. So I keep an eye on all of those. It's just not near the top of my list, Jas, but it's definitely on the list. So thanks for the question. All right. KIE, yeah, insurance. Sure. So the insurance sector. Now, for those of you that are wondering, Rog, what's in KIE? What is that even? So if you take a look at KIE, and thanks for the question, because this is an interesting sector that, doesn't get a lot of discussion. I agree with you. And 2 things to keep in mind. Whenever we're looking at an ETF, a lot of them are alarmingly illiquid. So when you're looking at the open interest of KIE, and I'm going to go look at it right now, September 20. Yeah, it's very, very, very low open interest. So KIE itself, unless you're buying the shares, which we do a bit of once a month, we look at our bigger, longer term portfolio, but we don't actively trade shares. The reason, by the way, I don't actively trade shares is unless it's a very, very, very low cost stock, who can go buy 1,000 shares of something or 500 shares of something, right? Think about the capital outlay it requires. And look, if a stock moves $1 and you've got 100 shares, you made $100, right? If you've got a stock that moves, $1 and you've got 1,000 shares, it's a different conversation. But, if you're buying a small number of shares and something moves 70 cents, I mean, you're barely going to cover commission. So I'm not a big fan of trading the actual stock when I can get the beautiful leverage of the option, right? So anyway, this is not a bad one to look at. It's $55, probably fairly scalable. The option, the open interest is really low, but what's in this group? So this would be things like Aflac. This would be things like Globe Life. This would be things like Old Republic. What else is in this group? First American. I off the top of my head, I can't really remember a lot. I think Primerica, Allstate, obviously names like that would be in there, Genworth. But we have to look at the underlying stocks within them to make sure there's liquidity. So I mentioned what, Aflac. So if I look at, say, Aflac, does it look like KIE? It does. And then I'm going to go look at the open interest. Yeah. So I'll give you an example. Let's say we were to pull back to 105 for a pullback buy on Aflac. Unless you're buying the shares, there's 324 open interest. So it's anemic. And that's sometimes the issue with options, where if we were buying the shares, no problem. These are probably plenty liquid. But if I'm looking at the options on, in this case, the calls on KIE or AFL, or I'm trying to think of another heavily weighted name, maybe Globe Life. That's GL. Yeah. So again, if you go take a look at the option chain, sometimes that's where the wheels fall off the wagon. So some are really interesting sectors, but unless the liquidity is there, there's not much as an options trader, an active options trader, that I can do with it. But yeah, definitely a cool place to keep an eye on, especially if you're looking at the shares side of the transaction, meaning, looking at any one of them. So there's a number of, there's a number of stocks in KIE. It's just a matter of finding one. You mentioned Progressive. Yeah, there's a number of them. I didn't list them all. It's a little bit more liquid, but it's still pretty low, right? If you look at PGR, I don't think you're typically going to see open interest over 500 or 600 on that. No, not that right now. Thanks. I'm getting my morning smoothie. All right. So yeah, that's, there's a lot of them in there. Sure. Okay. So let's circle back to, and by the way, if you ever want to know the weightings and the listing of stocks, um, all you need to do is, Yahoo Finance has these listed. I like a site called ETFDB. And if you look up a sector like KIE, you can see all the stocks weighted within them and the weighting that they hold in that group. All right, gang. So as always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station. Be good to each other.